Imagine for a moment the world's economy suddenly collapsing. Picture the bustling stock market, the heartbeat of global finance, plummeting to unprecedented lows. This isn't a fictional dystopia, but a stark reality the world faced in the late 1920s and early 1930s. This era, marked by widespread economic despair, is known as the Great Depression. The path to the Great Depression started innocuously enough. The Roaring Twenties was a period of prosperity and growth, a time when the American dream seemed within everyone's grasp. But beneath the surface, the economic foundations were unstable. Overproduction in industries, agricultural distress, and an uneven distribution of wealth were quietly chipping away at the economy's health. Then came Black Tuesday, October 29, 1929. Wall Street was in chaos. Investors traded nearly 16 million shares on the New York Stock Exchange in a single day, wiping out thousands of investors. The stock market crash didn't cause the Great Depression, but it signaled the start of the economic decline. The years that followed were marked by hardship and despair. Unemployment soared as businesses failed, reaching a staggering 25% in the United States. Poverty was rampant. Industrial production declined sharply. Banks, unable to recover loans and drained of their reserves, collapsed. International trade reduced by more than half, and prices fell, spiraling into deflation. Governments worldwide scrambled to respond. Some implemented protectionist policies like high tariffs, hoping to stimulate domestic industries. Others tried to reflate their economies by going off the gold standard and devaluing their currencies. But recovery was slow, and conditions remained grim for most of the 1930s. The Great Depression's impacts extended beyond the economy. It sparked profound social and political change. The economic hardship fueled discontent, leading to the rise of radical political movements in various parts of the world. It also led to a rethinking of economic policies and institutions. In the United States, for instance, the New Deal introduced by President Franklin D. Roosevelt brought about significant reforms in banking and finance, labor relations, and social welfare programs. The Great Depression was a defining moment in the 20th century. It was a period of severe economic downturn, triggered by the stock market crash of 1929. It led to widespread unemployment, poverty, and a sharp decline in industrial production. The crisis was exacerbated by banking failures, reduced international trade, and deflation. Governments implemented various relief measures, but recovery was slow. Yet, out of this hardship emerged new economic policies and institutions that shaped the decades to come. The Great Depression serves as a stark reminder of the cyclical nature of economies, the vulnerabilities inherent in unregulated markets, and the profound impacts economic crises can have on society and politics. It underscores the importance of sound economic policies and institutions in maintaining stability and resilience in the face of economic shocks. A trip down this historical lane isn't just about understanding past mistakes, it's about gleaning lessons for the future. Because history, as they say, has a way of repeating itself.